What should we be doing? What's been a nervous year so far?
It has. And I think especially coming off of the year that we just had, right? So when you look at how we ended 2021, 70 record highs in the S&P 500, the sixth best year for U.S. stocks since 1990, and really this 3-year stretch of double-digit returns. So when you compare that to how we started the year, it really just, should give you a lot of anxiety. However, even though things have drastically changed in the markets, the fundamentals have pretty much stayed the same. So we've got strong corporate earnings, even though the market has not really been rewarding those great earnings reports. The consumer balance sheet is really, really strong. And so we really have a strong fundamental backdrop. But I think going forward, I think investors really need to understand that this is not necessarily like a buy the dip game. This is really a planning game, right? So it's really an asset allocation game. So thinking about how you want to position portfolios, there are a couple of things that I'm looking at. The first thing is alternative investments. So if you have traditional equities and fixed income in your portfolio, right now your equity position is probably a little bit down. But adding things like alternative investments, so I like industrial REITs here, right? So think about all the warehouses that Amazon needs to get your items to you next day, or in some cases same day. So things like that I think are really interesting. The industrial REITs also have a low correlation to equities as well. Go ahead.
Does that mean like a warehouse type situation, an industrial REIT? Like, is that something that you buy, a company that makes warehouses or something like that, Tiffany?
Absolutely. Yep. Companies that are in the business of owning warehouses and renting them out to all of these e-commerce companies like an Amazon, like all these other companies that are shipping all of our products, because now everyone is ordering online. And so what those REITs do, number one, they have a low correlation to equities. Number two, they deliver a higher tax equivalent yield than stocks and bonds. So they actually kind of work double duty. And they can also be used as a good alternative to fixed income as well, and really good in a high inflationary environment, which we are in right now.
Make me an honest man, Tiffany. I promised our viewers you had sort of an under-the-radar tech play. We don't have much time left. PayPal. What makes it nice to you?
PayPal, not under the radar, but consumer demand is really driving mobile payments, and also just really remember, like, PayPal also owns Venmo. So think about all these person-to-person, money transactions that we're doing right now. I Venmo people at least once a week, and so I think this is a good opportunity to buy PayPal at a discount right now. So PayPal is a name that I think a lot of people like, a lot of analysts like, but right now it's on sale. It's down about, I think, like 14% year to date. Its high was about 310 back in July, so it's a good time.